Hey everybody, Sean from Invest to Live, and we are on episode 9 here, 9 in a row on Sunday nights of our sneak peek for the week in and around what's coming up, what I see in the markets, and what's happening on a Sunday evening here. So I'm going to hit you with a couple of really quick things here. It's been a crazy week as always. I feel like I got to start every show this way. The crypto markets are totally wild. Equities are sort of all over the place as well, but getting sort of shadowed by the crypto markets. We're seeing what I would say are really wild shifts of engagement across the entire macro ecosystem here from a geo perspective, with major countries coming out with bans and pushes for more taxes and more transparency, and what's happening from an overseas perspective, from a geopolitical risk perspective. So before I jump in, we do these every week. They're pretty short. Just want to give a couple quick things that are on my mind before you kick off your investing week or trading week, if that's the case for you. So if you're not currently subscribed, please do so. We really appreciate it. And I'm actually like beside myself yet again. Broke 800 subs and seem to be pretty well on the way to getting into 1,000 here in the next maybe month and a half or 2 months or so, which is absolutely amazing. So just hopefully some of the things I'm saying are adding some value. Let me know if they're not, and what would help you get more value. I'm glad to change up the topics and talk about different things, but let's jump in. I put a video out earlier today, so this is going to be a little bit shorter than normal just because that one took a lot of time to put some material together and look at some of the metrics I was working on. So here's what I want to talk about. Investing is not meant to be the wild, wild west. There are rules of engagement. There are ways to think about what you're going after. There are ways to look at your investments, understand risk, understand your profile for risk, understand where you have gaps in your downside protection piece. So what I want to talk about for this week coming up is take a minute, whether it's tonight or Monday morning on the AM, look at your portfolio, look across equities, real estate, excuse me, your crypto holdings. If you're in currency, look at your Forex markets. Excuse me, I've got a frog in my throat as well. And what I would really say is take some time more than usual and understand, are there currently things in your portfolio that shouldn't be there, aren't protected, or not in line with the way that you're investing for the long term? Excuse me. If you're a trader, let's flip this scenario over completely. Are there things that you're holding that you shouldn't be? Is it time to cut some losses and reset? Is it time to rethink strategy based on what's going on in the world around you? So going into this week, here's what we know. The crypto markets have been literally decimated. Now, here's the key, though. Decimated in the crypto markets is not the same as decimated in most markets. I've been around that space. I don't want to say I'm an OG in the game, but I got in 2015, so pretty early compared to many today. But there are many who are much earlier than me. So what I would say, since I've been in those markets, what I have really seen is this idea of price decimation sort of comes in and goes and comes and goes and comes back again. It's based on news that oftentimes is taken at surface value, at tweet value. If your way of investing or looking at what's going to happen in the next week over tweets that came out this weekend of 240 characters, I urge you to peel back the onion and think about what's in your portfolio and what that risk looks like. That might be that it's time to rethink what you're buying. It could be mining stocks. It could be crypto holding companies, if we're talking about that space. But I think there's a lot of equities out there that have been hit really hard that are great companies that are something you should be thinking about. I know going into this, there's two things I kind of put my eye on every night. Dow Futures are looking pretty flat right now. Not surprising. It was a crazy week. I think people don't have a feel for the equilibrium of the market right now. I would say a lot of traders, especially, not so much investors, but a lot of traders are just not sure where things are going to go here. And I'm going to jump into why I think that is quickly and how it's going to pertain to the week coming up here. But even the Nikkei is only up a little bit now, which is a good sign because we want to see that start to rise overnight in the in the Asian markets. And also, I am allergic to pollen, and it's a really bad pollen today. So my coughing and clearing of my throat is going to be a little bit of a pain in the rear end. So I apologize ahead of time. So here's why what happened with crypto over the past week and this current weekend is really important in terms of my overall investment strategy for the week ahead. And again, I don't care where you're putting your money, what type of asset is, whether it's a standard investment portfolio or heavy on heavy on alternatives. As money is potentially leaving that space, leaving Bitcoin, Ethereum, etc., it could be going somewhere else. I saw some stories that it was going to push into gold. I don't know. I frankly don't believe that. I think that the people who are investing into a Bitcoin or an Ethereum are not the same people who are going and throwing that money into gold. I just don't see that happening personally. Maybe that means you're going to keep it in cash. Maybe it means you're looking for other opportunistic areas to go after. But excluding institutional clients, I don't see that happening. In an earlier video today that I put out, I was saying that something like 800,000 wallets were liquidated as part of this over-leveraged community of traders in the crypto market. So a lot of the money and a lot of the associated downward trend that we saw could be essentially wiped out. So there may not even be a recycling of that cash into other investments. It could just be a period where we have to hold on for a little bit. So here's really all what I'm thinking for the week ahead here. We know that Dow is flat going in. We know the Nikkei is slightly up. We know that crypto is really down. So what you have to think about is where in your portfolio, after all these events, can you quickly assess where there's opportunity, where there's an opportunity to get into something cheap that you believe in? And if something hasn't gone down, but you feel like there's a risk that it might, now's the time to do something about it. Set a stop loss, set a limit sell, make sure you're taking advantage of the potential to go down as well. I won't get into the strategy of this, but if the general markets are going to follow the crypto markets, and I'm not saying that they will, but if you think that that's possible, these are great times to start thinking about straddle options, right? That kind of a situation where we've been seeing things maybe trend a certain direction, but within a channel. If you play a straddle the right way and you believe that something's likely to go way up or way down, this is a good opportunity to start thinking about those as well as a way to generate some cash. I'm going to cut this a little bit short because, as you can tell, I'm having some problems talking here without coughing every few minutes. So I apologize for that. I just really want to stress again, investing by its very nature is not meant to be gunslinging from the hips and wild, wild west mentality. You cannot operate yourself in a positive way over the long term by doing all of your investing based on headlines of news stories and tweets that come out. It's just not realistic. It's just not going to happen. So what I would really urge you to do, and I'm really focusing on crypto right now for this conversation, but it really applies to all of your investments. On Sunday nights, go and look at those headlines that got you thinking, and then do some research on what's actually behind them, right? One thing we saw that has been a consistent push is China's banning Bitcoin mining, for example, or crypto mining. If you've been around for a little while, I can assure you, I've been hearing those stories since like 2013 and 2015 and 2017 and 2021. And the reality is, if they do, great. That means we can potentially find more miners who are in much more green or environmentally friendly locations, leveraging energy from a different source than coal or standard fossil fuels. So maybe that solves some problems for this space. Conversely, maybe the other piece of this as well is maybe this helps from a decentralization perspective as well. If China's cutting down on who can hold and mine crypto, and we know that there's a large centralization of cryptocurrency there today, this actually just furthers, in my opinion, the decentralization of it in general, which sort of almost emboldens the use case behind it. So when you take the first article of China's banning Bitcoin, ... etc., and you actually read into it, and it's like, this happens all the time. This could lead to better decentralization. This could lead to better, greener, more environmentally friendly sources of energy usage. That's what I'm talking about. Pull back the headlines, understand the story, do a little bit of research, start to understand what's going on in there as well. My final thing tonight I really want to say as we're going into this week, if you are in equities and you're doing fundamental research and analysis, or you're doing technical analysis, or you're doing even social arb and you're understanding the direction of the markets, that's the same kind of thing you should be doing when you're into Bitcoin or Ethereum, et cetera, whatever it might be. You can't just take things at that surface value. Start to understand how to analyze blockchain. Start to understand what kind of wallets exist. Are they growing or shrinking? How long have they held them? What's the price they're paying for those coins that sit in those wallets? That starts to help you build up an understanding of the way money moves, the way blocks are built, the way they're mined, the way those rewards are pushed out, the way money or currency is pushed in and off of markets. You can start to see what wallets they're going towards. Are they whales? Are they relatively large but individual investors? Are they just retail traders, or are they traders in general? These are the kind of things you got to start thinking about when you look at the week ahead. Is what has happened over the weekend? How do we finish out that week? How will it affect the week ahead? And I think this real key takeaway is we never know. But all you can do is come up with a risk metric or a risk profile for what you think that fits the style of investing or trading that you're going to be doing, and then live and breathe within that realm. In many ways, we think about classic technical analysis of trading in a channel. Well, I think we need to learn to do that ourselves in the way that we look at things, the way we build out our sort of vision for the way we want to invest and we want to trade and we want to build a portfolio too. My last thing is this. We've been seeing a ton of mergers and acquisitions popping up. Sometimes it seems like the news breaks on a Sunday night and then is already done by Monday morning. I think that with the markets being the way they are today, this could happen quite a bit more. I would not be surprised to see a lot of that happening in the crypto space. I think that there's a lot of companies out there who probably just got absolutely whacked this weekend. And you could see valuations absolutely at the floor, which could be acquisition targets. I'm not talking about the Coinbases here. I'm talking about smaller miners. I'm talking about OTC type companies. I'm talking about the folks who are, on exchanges that are not in the US, for example. So those are the kind of things I'm looking for as well is, are there opportunistic things out there that I can get in front of that I believe could be good targets, that I could believe there are consolidation plays? And as well, I think there's also just a general need to look and understand, is there some sort of rebalancing that has to happen here? Will it be into gold? I don't know. Will it be into more traditional like index funds? I don't know. But you got to figure out how to make it work for you and how to go about it. So anyways, cutting it a little bit short tonight. My throat is obviously killing me, and I'm sorry for the coughing and voice changes here. But I'm going to say one more thing. In the time that I've been in the markets and the time that I've been investing and trading and across many, many asset classes, there's one strategy that has really worked for me. I'm not a financial advisor. I'm not giving you advice. I'm talking about me personally, what has worked for me. When I hold things long term, I tend to win. And I think that doesn't matter whether it is real estate, whether it's equities, whether it's options, whether it's commodities, or whether it's cryptocurrencies. I think the longer you can hold with less movement, you're going to save on the taxes. You're going to pay less when it does come time to sell. And overall, markets do generally tend to go up over time. This is largely impacted by inflation as well. So I sort of had this as a joke, but also for real, because you got to HODL. It doesn't mean just crypto. This is everything. When you can hold long term, you're generally in a good spot. It's not advice. This is just my own perspective on this. So do with it as you may. But otherwise, have a good week. Be safe. Understand the markets. Keep paying attention to what happens at night, because what happens at night can affect what happens in the morning. It helps to give you clues as to what's coming. This is why I talk about Dow Futures. This is why I like to look at the 24/7 markets of crypto as an indicator for equity markets or for currency markets. So start to learn how things correlate, how they move together, how you can plan your week out and understand what that risk is, so that by the time Sunday night rolls around, you can sit back and relax for the week ahead because you have a good feel for what's likely to happen. So with that, really happy that if you watch this. I appreciate it. Please give us a thumbs up if you haven't already. And otherwise, good luck this week. Thanks so much.